Hello dear student, welcome again. Today we are going to discuss about the piecemeal distribution of cash, practical example number 7, in which we will study how to add reserve fund, how to pay income tax, that is third party liability, which is preferential liability, creditors, and bill of exchange on the liability side, that is bills payable. With this, we will also study in this lecture that how to calculate the ratio if ratio is given in fraction. So let us start with our example. Here is the example number 7 of piecemeal distribution of cash under surplus capital method. We can see here the example of A, B and C, where in partnership sharing profits and losses in the ratio of half is to 1/4 is to 1/4. That means the ratio is 2 is to 1. 2 is to 1 is to 1. So they decided to dissolve the partnership firm on 31st December 2019 when their balance sheet was as follows. Here is the balance sheet as on 31st December 2019, and here are some liabilities with the capital. After that, there is a reserve fund of rupees 80,000. As I earlier mentioned in earlier video, that reserve fund, general reserve, or profit and loss account, which is given on the liability side, it is owned by the partners, and it should be distributed among the partners. So here we will distribute this reserve fund in partners capital. After that, there is third party liability, that is income tax, creditors and bills payable. With this we have some assets as well as cash. On the asset side, we have assets equal to liabilities. So after the balance sheet, the firm was dissolved on 31st December 2019, and the assets were realized gradually as follows. Uh, First of all, I would like to suggest one thing. You can take a screenshot of this example, or you may note down in your notebook. Further, I would like to suggest one thing. When you are watching the video on YouTube, go to setting and set your video setting of 360 pixel to or 480 pixel, which will help you to easy access and clear view of the video. Okay, just go ahead. Here we have realization which are gradually on the 15th of January, 24th of February, 7th March and 30th April. With this we have some adjustment. As and when the cash will be available, it should be distributed. Means what? On the 15th January we got 60,000, so it has to be distributed on the 15th of January. On 24th February we got 8,44,000. It simply means that we have to distribute 8,44,000 on 24th of the February. So here additional information is given. Further, it was decided that rupees 20,000 be kept aside for realization. That means for realization expenses. So here we have to kept aside a provision of rupees 20,000 for realization expenses. However, the actual expenses of the realization was paid in April 12,000. It simply means that on the very first day of dissolution of partnership firm, we have to kept aside rupees 20,000. However, in April, actual realization expenses is rupees 12,000. That means we have an excess of rupees 8,000 provision, which we are going to be made on the very first day. But in the April, it will be added in the realization amount. So you are required to show the distribution of cash on the basis of highest relative capital method. So this is the example. You can note down this example, or you can write it in your notebook, or you may take a screenshot of this example, which will help you to solve the example. So let us start. This method is surplus capital method. So first of all, we have to calculate surplus capital. Surplus capital means what? It's as earlier already explained that surplus means a partner who have been given an extra amount of capital for the partnership firm. Here, if you look over here, you can see here Mr. A gives 4 lakh, Mr. B gives 2 lakh 20, and C gives 1 lakh. But actually, Mr. A does not paid an extra amount, or we can't say that is the surplus capital. So for that, we have to go through in a scientific way. So this is the statement of showing surplus capital. For that, we have to prepare a 5 column, that is serial number, particulars, capital A, B, and C. First of all, you have to mention the balance of capital as per balance sheet, that is 4 lakh, 2 lakh 20, and 1 lakh. After that, you have to add the general reserve or reserve fund or reserve or profit and loss account which is given on the liability side. If it is profit and loss account, it also be added in the profit and in the capital. But if the profit and loss account is given on asset side instead of liability side, at that time you have to subtract that amount from the capital. So here 80,000 is the reserve fund. We are going to distribute that 80,000 between A, B and C in the ratio of 2 is to 1 is to 1. So 80,000 divided by 4, answer is 20. So 20 is one share, 20 is one share for C, 20 is one share for B, and 40 is one share for A. So this is the reserve fund which is distributed among the partners. After the distribution of reserve fund or profit and loss account liability side, that is credit balance or reserve fund or general reserve or general reserve fund, whatever it may be, you have to distribute it among the partners. It will increase the capital of the partners. So now we have adjusted capital of rupees 4,40,000 and 2,40,000 and 1,20,000 of all the partners, that is A, B and C respectively. So here after the adjustment of capital, we have to mention here the profit sharing ratio for calculating the unit capital. So here we have a profit sharing ratio of 2 is to 1 is to 1, that is ratio of A, B and C. After that we can calculate the unit capital. Unit capital is what? Unit capital is adjusted capital or capital divided by profit sharing ratio. So here C is the unit adjusted capital and D is the profit sharing ratio. So I mention here C divided by D. That means 40,000 divided by 2, the answer will come 2,20,000. 2,40,000 divided by 1, answer will remain same 240, and 120 divided by 1, answer will 120. So after getting the unit value, we have to consider that what will be the base price or what will the base capital, what will be the base capital. So here base capital is 1,20,000, which is list amount. So we will consider 120 as a base capital. So 1,20,000 will be one share. It will be multiplied by the profit sharing ratio and it will conclude to the proportionate capital. So the next step is proportionate capital. Proportionate capital equation is base capital into profit sharing ratio. So base capital is 1,20,000. It will be multiplied by the respective partners profit sharing ratio. So 1,20,000 into 2, it comes to 2,40,000. 1,20,000 into 2, it comes to 1,20,000 in case of B, and in case of C, it will remain same as 120 into 1 equal to 120. So the proportionate capital is 2,40,000, 1,20,000 and 1,20,000. After getting the proportionate capital, you can calculate the surplus capital. Surplus capital is what? Surplus capital is adjusted capital minus proportionate capital. So C minus F. So here you can see surplus capital, that is adjusted capital minus surplus capital, that is C minus F, equal to 4,40,000 minus 2,40,000. 4,40,000 minus 2,40,000, the answer will 2 lakh. This is surplus capital of Mr. A. And in the same way, 2,40,000 of Mr. B minus 1,20,000, answer is 1,20,000 is the surplus capital of Mr. B, and C's capital will be 0, that 120 minus 120, answer will be 0. That means here Mr. A and B provide a surplus capital of rupees 2 lakh and 1,20,000 respectively. After that, we have to calculate absolute surplus. Here we got surplus of A and B, but we have to find out a single partner who have given been extra amount for the partnership firm, that is and surplus capital. So again we are going to repeat all these steps: profit sharing ratio, unit capital and proportionate capital. It is very simple. Now again repeat all these steps, that is profit sharing ratio is 2 is to 1, 2 is to 1 is to 1. So here 2 is to 1, C's ratio will not be considered as its capital already nil. Then we will calculate the unit capital. So unit capital will be G divided by H, that means surplus capital divided by profit sharing ratio. So 2 lakh divided by 2 equals to 1 lakh, and 1,20,000 divided by 1, answer is 1,20,000. So after that we will consider the minimum price, minimum amount of capital or unit value that will be considered as base capital. So here 1 lakh is the least amount and 120 is higher. So 1 lakh we will be considered as a base price for calculating the proportionate capital. So here proportionate capital is equal to base capital divided into my profit sharing ratio. We consider here 1 lakh as a proportionate as a base capital. So base capital 1 lakh into 2, answer will 2 lakh, and 1 lakh into 1 equal to 1 lakh. So proportionate capital will be 2 lakh and 1 lakh of A and B. After the getting proportionate capital, we can calculate absolute surplus of B. that 2 lakh minus 2 lakh answer will be 0, and 120 minus 1 lakh answer is 20,000. That means we have an absolute surplus of Mr. B. It simply means that Mr. B provide the absolute surplus capital for the partnership firm compared to A and C. So here we have to pay Mr. B firstly 20,000. After that we can pay Mr. A and B 2 lakh and 1 lakh 20,000 to B. So 2 lakh to A and 1 lakh 20,000 to B. Out of 1 lakh 20,000, Mr. B is already getting over here 20,000. So he will get only 1 lakh in the second step. So in this way, we can calculate the surplus capital. After getting the surplus capital, we have to consider about the priority of payment. To whom first of all we have to pay, and to whom we have to pay at the last stage or last step. So here you can see a realization expenses. It is our first priority. It should be provide firstly, then you can pay other liabilities. On the liability side, we have one liability, that is income tax, which is third party liability, and which is called as government dues. So after realization expenses, we have to pay income tax, then creditors and bills payable, and then any other liability if any. But we don't have any other kind of liability, so we have only these three liabilities and one reserve for realization expenses. So we are going to prepare a priority of payment. Here you can see a priority of payment. On the very first number is reserve for realization expenses, that is 20,000. After that, third party liability, in which preferential liability, that is income tax. The second number is of income tax. After the payment of income tax, we will pay unsecured liability, that is creditors and bills payable. Creditors is of rupees 4,68,000 and bills payable of rupees 3,12,000. So the number is 4,68,000 plus 3,20,000. The answer is 7,80,000. It simply means that when we will pay 20,000 for when we reserve for 20,000 for realization expenses, after that income tax of rupees 20,000. After paying all these payments, we have to pay creditors and bills payable, and it means when we are going to pay creditors and bills payable, at that time we must have of rupees 7,80,000. If we don't have 7,80,000, at that time we have to use the ratio, that is pro rata or ratio of liabilities of particular person. So here creditors and bills payable ratio 4,68,000 into is to, here you can see 4,68,000 equal to 3,12,000. So this is the ratio. So we will divide it and come to the conclusion. It will be up to 3:2. You can divide it by 2 or any other number. So the answer will be 3:2. So here is the ratio of liability, that is 3:2. After that we have to pay absolute surplus of Mr. B, as earlier discussed about the surplus of Mr. B. After that we will pay to surplus capital here 20,000 payment. Then we will pay surplus to Mr. A, that is 2 lakh, Mr. B, that is 1 lakh. So the actual surplus is 2 lakh and 120. So here you can see 2 lakh and 120. But here, sorry, here this absolute surplus of Mr. A is 2 lakh and surplus of Mr. B is 1,20,000. Out of 1,20,000, Mr. B is already received 20,000. That means out of 120 he received 20. He will receive, now in this step he will receive 1 lakh. So here he will receive 1 lakh and Mr. A will receive 2 lakh. So here we have to 3 lakh of amount. If we don't have an amount of 3 lakh, at that time we will distribute the amount in 2:1 ratio. After the payment of all the liability, that is realization expenses, third party liability of income tax, unsecured liability like creditors and bills payable, absolute surplus of particular partner, that is in case of this example Mr. B, then surplus capital of A and B, we can pay all partners in profit sharing ratio if we have and money in our hand. So in this way we must have prepare a priority of payment. After the priority of payment, we can prepare a statement showing piecemeal distribution of cash as per surplus capital method. For that we have to draw a column of liabilities. First of all, we have to column of debt, then particulars, available cash, total liabilities, income tax, creditors, bills payable, and capital of A, B, and C. On the basis of problem, we can prepare a column. So the last column will be Mr. C, then second last is B, third last is A. So here we have three partners column, that is A, B and C. Before that, we have to consider the priority of payment. On the basis of priority of payment, we can prepare a column. So income tax, creditors and bills payable. These are three columns. So income tax, creditors and bills payable. So these columns are prepared, and total liability is nothing but the total of all these liabilities, that is income tax, creditors, bills payable and capital. So that is the total of all the columns. So here we have prepared one extra column, that is total liability column. With this we have an available cash which is given in our balance sheet, that is on the last day of our balance sheet 20,000 we have a cash in our hand. So just solve the problem with the step by step. So first one is balance as per balance sheet. On the balance sheet, that is balance sheet is given on 31st December 2018. So on the very next day, that is 1st of January 2019, we have a balance, sorry, 1st January of 2020, we have a balance of cash rupees 20,000. Then income tax rupees 20,000. You can see here the income tax amount 20,000, creditors 4,68,000 and bills payable 3,12,000. You can see here creditors of rupees 4,68,000 and bills payable 3,12,000. While capital is 4,220,000 and 1 lakh. So here you can see 4,220,000 and 1 lakh. This is the total liability. So when we consider all the liability, that is 20,000 plus 4,68,000 plus 3,12,000 plus 4 lakh plus 220 plus 1, the total becomes 1 lakh 15 lakh 20,000, that is total liability. After that we have to add the general reserve or reserve fund or reserve or general reserve fund or profit and loss account which is given on the balance sheet's liability side. So here we are going to adding the general reserve or reserve fund in the ratio of 2:1 in between A, B and C. So that is 80,000. That means our liability will increase by 80,000 as a general reserve. It is a liability of partnership firm. Whatever if it is going to be received by the partners, then also it is a liability of partnership firm, not only but not the partner. So on the capital balances, we will add the reserve fund, that is 80,000. It has to be distributed among the partners in the ratio of 2:1. That is already we have already distributed over here, that is 40,000, 20,000 and 20,000 in the ratio of 2:1. So here you have to just put that 40,000, 20,000 and 20,000. After this we have some adjustment, that balance of cash is available in our hand, that is 20 lakh. Total liability now increased by 80,000, that is 16 lakh. Income tax is 20,000, creditors is 4,68,000, bills payable 3,12,000. Capital balances are increased by 40,000 of mystery, that is 4,40,000. B of 2,40,000 and C becomes 1,20,000. So here you can see the first realization. There is no need of first realization. We have a 20,000 of cash, and first priority. You can see here the first priority is reserve for realization expenses, that is 20,000. So our balance of rupees 20,000 whole balance will be kept aside for the realization expenses. So 20,000 will be kept aside for realization expenses. So less reserve for realization expenses in our hand. Now balance is nil, that is 0. That means we don't have a single rupee for further payment. After the realization expenses reserve, we have a third party liability, that is income tax of rupees 20,000. But here we don't have a cash, so we will call our first realization, which is on 15th of January, that is 60,000. So here first realization of rupees 60,000. Now we can pay 20,000 for income tax. So less paid income tax 20,000. So here cash will be reduced by 20,000. With this, total liability also will reduce, and income tax will be reduced by 20,000. Now income tax becomes nil because we paid income tax of rupees 20,000. Total liability will be reduced by 20,000. It comes to 15 lakhs 80,000, and in our hand there is a cash of rupees 40,000 after the payment of income tax of rupees 20,000. So we have 40,000. Now our next priority of payment is, after the payment of income tax, we have to pay unsecured liability, that is creditors and bills payable. The amount of creditors is 4,68,000 and bills payable amount is 3,12,000. That means we must have 7,80,000 in our hand. But actually we don't have 7,80,000. We have only 40,000. So in this case we have to distribute the amount in creditors and bills payable ratio, that is 3:2, which is given over here. The ratio is 3:2. So here you can pay creditors and bills payable 40,000 total amount will be distributed to the creditors and bills payable. Total cash will be reduced by 40,000. Total liability will be reduced by 40,000. And Mr. A, sorry, creditors will receive 3 shares. So equal to how much amount? 40,000 into 3 divided by 5. The amount is 24,000. Mr. Creditors will receive 24,000 and balance, that is 2 share of rupees 16,000 will be received by bills payable. After the payment of uh, after the payment of creditors and bills payable, in our hand we don't have a cash, so here the balance is again nil, that is the balance is 0. So with this you can see here the balance of cash is become 0 and total liability is 15,40,000. So after the payment of 40,000 to creditors and bills payable, after that we can call our second realization, which is on the 24th of February, 8,44,000. So now we have a sufficient balance here. Second realization 8,44,000. In earlier stage we have to pay creditors and bills payable of rupees 7,80,000. Out of this we already paid here in this step 40,000. That means the next step we have to pay 7,40,000 to creditors and bills payable. So here we are going to pay creditors and bills payable of rupees 7,40,000 in the ratio of 3 is to 2. So total cash will be reduced by 7,40,000. Total liability will be reduced by 7,40,000, and creditors will get of rupees 4,44,000 and bills payable will receive 2,96,000. How it is calculated? So equal to 7,40,000 into 3 divided by 5. The answer is 4,44,000. That is amount of creditors. And if it is calculated by multiplying 2, the amount is 2,96,000. That is the amount of bills payable which is given to bills payable. So after that our balance is in our hand, that is cash we have 1,04,000 and total liability still we have of rupees 8 lakh after the deduction of creditors and bills payable payment of rupees 7,40,000 in earlier stage. Now we have a balance of rupees 8 lakh 1,04,000 cash. After the payment of creditors and bills payable, our next payment is Mr. B, that is absolute surplus. So we can pay to Mr. B. In the next step, let's pay to Mr. B, that is absolute surplus of rupees 20,000. Cash will be reduced by 20,000 and total liability also will be reduced by 20,000. With this, Mr. B's capital will be reduced by 20,000. After the payment of 20,000 to Mr. B, his balance will be 2,20,000, while balance of A and C will remain same. So here the total liability will be reduced by 7,20,000 and it will be 7,80,000. So total balance of cash is available still in our hand, that is 84,000. After the payment of surplus capital, absolute surplus capital, we can pay surplus capital of Mr. A and B. So here you can see the surplus of A and B is 2 lakh plus 1 lakh, that is 3 lakh. Actual surplus of Mr. B is 120, but out of 120 he is already received 20,000. So here he will receive only 1 lakh. So his amount will be 1 lakh and 2 lakh of rupees Mr. A. So here we don't have 3 lakh. That means we have to distribute the amount in the ratio of 2 is to 1. So less cash will be reduced by 20,000 minus total liability 84,000. Total cash will be reduced by 84,000 and total liability will be reduced by 84,000. We have to distribute this amount among the A and B, that is 84,000 into 2 divided by 3. So this is 56,000. This is an amount of Mr. A, and Mr. B will receive 28,000. So that is one share. So you can see here Mr. A is getting 56,000 and Mr. B is getting 28,000. So this is nothing but the surplus capital of rupee out of rupees 3 lakh. We just paid only 84,000 and balance is still payable. Now we don't have a cash, that means balance is nil. So in this case we can call our third realization, which is on 7th March, that is 3,28,000. So here you can see the third realization on 7th March of rupees 3,28,000. First of all we have to pay 3 lakh to Mr. A and B. Out of 3 lakh we have paid 84,000. That means we have still payable a balance of rupees 2,16,000 to A and B. So we have to pay Mr. A and B. So here you can see payment to Mr. A and B, that is in the ratio of 2 is to 2, 2 is to 1, that is 2,16,000. Total liability will be reduced by the same amount, and Mr. A will receive 1,44,000. How it is calculated? You can see here 2,16,000 into 2 divided by 5. The amount is, sorry, into 5, no, into 3, that is 1,44,000, and into 1, if multiply by 1, the amount of rupees 72,000 which will be received by Mr. B. So this is the amount out of surplus capital. Mr. A got 144 and Mr. B got 72. After the payment of this amount, we have a cash of rupees 1,12,000 in our hand. With this, we have to pay a liability of rupees 4,80,000, and till Mr. A's capital is payable 2,40,000 and Mr. B's capital is rupees 1,20,000. With this, Mr. C's capital is same. So after the payment of absolute surplus and surplus, now we can pay an amount of rupees whatever we have in the profit sharing ratio, that is 2 is to 1 is to 1. So here let's pay to Mr. A, B and C in the ratio of 2 is to 1 is to 1, that is 1,12,000. So total cash we are going to distribute among the partners, all partners in the profit sharing ratio. So total cash will be reduced by 1,12,000. Total liability will be reduced by again the same amount, and Mr. A will get 2 share, Mr. B will get 1 share, and Mr. C will get 1 share. So equal to, we have 1,12,000 divided by 2 plus 1, that is 4. That means 1 share becomes 28,000. So 28,000 into 2, 56,000 will be received by Mr. A, 28,000 will be received by Mr. B, and 28,000 will be received by Mr. C. After the payment of this third realization, we have a cash balance of rupees 0. That means we don't have a cash, and now we can call our next and final realization, that is realization on 30th April of rupees 2,32,000. That is 2,32,000. That is fourth and final realization. So here we can call our next realization, that is 2,32,000. But keep it in mind, there was one additional information given at the bottom of the example, that is, as and when the cash will be available, it should be distributed as we have already paid the amount on the same date. Further, it was decided that 20,000 be kept aside for realization expenses, which we were made and provision on the very first day. You can see here the provision of realization expenses, that is of rupees 20,000. So realization expenses provision made on the very first day. But actually, however, the actual expense of realization was rupees 12,000. We made a provision of rupees 20,000, but the actual expenses of the realization was 12,000. That means out of 20,000, there is an unused reserve of rupees 8,000. So you can see here the unused reserve for realization expenses, that is provision 20,000 minus actual expense 12,000. So unutilized or unused reserve is 8,000. So balance is 8,000. That means this cash will be used for the next payment. So 2,32,000 plus 8. Now we have a cash of rupees 2,40,000 in our hand. After the addition of 8,000, we got an extra amount. Now we have already paid all the payments, and the last payment should be received by all the partners in profit sharing ratio. So we will distribute 2,40,000 in the profit sharing ratio. Let's pay to A, B and C in the profit sharing ratio, that is 2 is to 1 is to 1. So cash will be reduced by 2,40,000. Total liability will be reduced by 2,40,000. With this, Mr. A will receive 50% of amount, that is 2,40,000 divided by 4 equals to 160,000 into 2, that is 1,20,000. So here you can calculate 2,40,000 into 2 divided by 4. So Mr. A will receive 1,20,000 and Mr. B will receive 1 share and Mr. C will receive also 1 share. So that is 60,000. So you can see here 1,20,000 will be received by Mr. A, B will receive 60 and C will receive 60,000. After the payment of all these liabilities, we have a balance cash of rupees only 0. That means there is no cash, and we have a total liability of 1,28,000. So here you can see the total liability still payable 1,28,000, that is unpaid liability. With this, we have a capital balance of 64,000 plus 32,000 of Mr. B and plus 32,000 of Mr. C. So the total of these three partners' unpaid balance should be matched with the total liability. That means our balance payable amount is rupees 1,28,000. It is called as not a balance, it is called as realization loss. So we have a realization loss of rupees 1,28,000, which is bear by Mr. A 64,000, Mr. B 32,000 and Mr. C 32,000. So the total of Mr. A, B and C, it comes to 1,28,000. That is here you can see the amount of total liability balance which is not paid or which is unpaid or which is uh, to be called as a realization loss. So in this way we can calculate the realization loss and prepare a statement of piecemeal distribution of cash as per the surplus capital method. With this I would like to say thank you very much. In the next example we will see about the partners loan and particular property mortgage by the company mortgage by the bank. We will see in the next example. With this I would like to say thank you very much. Wish you all the best.